Tech trying to rebound after the Nasdaq's worst week in 2 months as investors brace for Nvidia earnings later this week. Our next guest is looking through the volatility and sees more opportunity for tech in the year ahead. Sung Cho is co-head of public tech investing at Goldman Sachs Asset Management. Joins me here at Post 9. Good to see you.
Good to see you as well.
Obviously, it's the event of the week. Nvidia numbers. Stock is like backing off just a little bit here. A lot of noise around, the pacing of Blackwell and all the rest of it. What's your read on what embedded expectations are for Nvidia and how it's prepared to trade?
Yeah, certainly expectations are for a beat for Nvidia. And I think in some ways the reason why expectations are so high is because the cloud companies have actually given us Nvidia's earnings already, right? It's like 50% of every dollar of CapEx is being spent on an Nvidia GPU. Cloud CapEx went up by 9% this quarter in aggregate. So we expect fairly high bar for them beating because that's what they sell, right? And so the key to watch is going to be around Blackwell, right? Blackwell is the next generation platform, and some early indicators around that are very, very positive, and we're going to continue to watch that.
So you have this report this morning or overnight about how maybe there's a little bit of a logjam in installations of Blackwell because of overheating issues. We've known this was something that was, something had to be figured out.
Yeah.
At the same time, a bigger picture debate seems to me over the last several weeks happening about whether the pacing of improvement in the AI models is sufficient at this point to justify that much more, let's say 2026 levels of further investment. How does that?
So let me hit on both of them. So Blackwell, this is their first foray into doing something beyond just semiconductors, right? And so it's not just semiconductors that they're selling, but they're selling an entire system solution. So obviously there's going to be ups and downs because this is a relatively new foray for them. But this is one of the best executing companies out there, and we have no doubt they're going to be able to solve the heat dissipation issues over time. And your second question?
Well, about the large language models, how the next generation is really not showing the same pace of improvement.
Right, so that's the report that we saw on OpenAI and some of the, exactly. So in some ways you could spin that as a positive, right? Because these guys are not going to stop trying to improve their models.
So in other words, the sunk cost fallacy says, we've invested this much, even if it's slowing down, we have to invest that much more.
I think that's a big debate in the market right now, right? It's like everybody's looking around. We've spent $500 billion on AI infrastructure, and everybody's looking around and saying, where are all the applications?
Right.
What are the use cases for this thing? And what is the ROI? And the natural conclusion is that, look, there must be some kind of slowdown coming. But I think what people are missing is that these cloud companies are investing for their existential relevance over the next 20 years. Do you think Google or Amazon want to be your second or third best large language model out there?
Yeah.
So they're pressing ahead, and I think this question about ROI is a good one, but I think there are other factors at play right now.
At the same time, you've seen this recent burst of outperformance of software names relative to the average semiconductor, kind of like non-NVIDIA semis. Does that seem like it's sustainable, and what do you think is behind that?
Yeah, so I think it's really, really interesting to set up for software, and we're very bullish software as we go into 2025. Software has been one of the worst performing sectors over the last couple of years, and it's a combination of higher interest rates, weaker fundamentals, and some secular concerns around what AI is going to do to software, right? But we think that the non-AI parts of software are really set to rebound this year, and we saw it from results like Cisco. Cisco reported positive bookings for the first time, and so you have the AI ecosystem, and then you have the non-AI ecosystem, and we're actually starting to see positive momentum for the non-AI part of the ecosystem, which should read bullish for a lot of the software companies.
Does that mean, it doesn't have to be one or the other, but does that mean that there's going to be this shadow over other semis for a while, whether it's because of trade concerns or just the cycle?
I don't think so. I think it's just really starting point matters, right? Semis have massively outperformed software as a starting point. They've benefited from the build out of this AI infrastructure, and at the margin, there is some softness and some concern. But I think what you're seeing over the last week, and you saw one of the biggest rotations, software versus semis, that we've seen in the past kind of 12 to 18 months, is really just a function of the starting point.
And, we're at a moment where a lot of the themes people are most focused on almost seem like they're separate from tech, right? It's about the various policy things. It's about whether the cycle accelerates from here in terms of the economy. Where do you think the buy side is set up in terms of, okay, everyone was a little crowded in Mag 7 at the midpoint of the year. Where are we now?
There's a lot of enthusiasm. I think some of your prior guests had talked about AI infrastructure. There's a lot of enthusiasm around that. Those stocks have actually been some of the biggest performers. I was on the show last time talking about GE Vernova like 3 months ago, and that's been a great stock. So I think we're continuing to see upside in that group, but it's not the kind of ginormous upside that we've seen in the past, right? And so we're kind of going back to the Mag 7. The Mag 7 actually has retreated a little bit during this rally.
I mean, Microsoft's done very little, right,
yeah.
for months.
So, like, I think there's a little bit of this, like, enthusiasm around non-Mag 7 stocks, but we're actually starting to find more opportunities on the Mag 7 side. And one of the names that we're getting increasingly very bullish on is Facebook and Meta.